So now I've hit the record button, so we're recording this for everybody. So welcome back, everybody, for the risk module, and delighted to be welcomed by Angelina. Um, so yes, so the chat that the people who are listening to the recording won't be privy to, um, is the chat we had just beforehand, guys. In terms of risk, let me just put this in context for you. Um, you know, look, we know as credit people we are not accountants, and I know that, and I am not an accountant, and I don't want to be an accountant. The reality of the situation is that in order to be good credit managers, we have to be able to understand and evaluate a set of accounts. It will become part of your career at some stage. Somebody will drop a set of accounts on your desk and say, you know, can they have 50 grand? And it happens all the time. Or just somebody drops out of the sky and you don't know them from Adam and they want to open an account with you, and now you have to make a decision. And what this module is giving you is some method of understanding what the account is. So it's not about knowing all the details and knowing, double entries and all that kind of stuff. All the double entry accounts at the start is all just to sort of give you a bit of background in terms of where the accounts come from and where the figures are and all that kind of good stuff. Really, as credit people, what we want you to do is to understand the figures, where they come from, what they mean, and then to be able to make a decision based on that. So, just to put your minds at rest for those of you who might be dreading it, um, with all that we have covered, right? So you have done your short tests and you've marks out of 10 for that. You have done your assignments, you have marks for 20 out of that, and the exam is 70%. So all you need to pass is 28 out of 70. That's all you need to pass the exam. So let's break that down even further. Question one, which is preparing a P&L account, will give you 50 marks. Question two, which is the ratios, will give you 50 marks. And then the other two questions will give you 20 marks each. So if you can get question one and two, you have now, you know, flown over the line at this stage. So even one of those, like 50 out of 140 is probably almost enough to get you over the line. So even if you just do your P&L and balance sheet, and do some of the ratios, you will get over the line. And again, you know, you will have, and we give you the ratios. We'll explain hopefully exactly what is required, and that's what it's all about. So look, don't panic. You don't have to know everything. It doesn't have to be perfect. And on the P&L account, as I said to you before, the whole thing about it is just just get the figures in the right format. So that is what's all about. So what I want to do now is the way we're going to do this between Angelina and myself is I'm just going to go through for question one. Let me share my screen now and show you the question that you were given. Share. Bump. Okay, so you should now be able to see. Is that legible or is it big enough, or do I need to make it a bit bigger for you?
That's okay.
A little bit bigger, maybe.
No.
Like,
I'll make it a little bit bigger. Yeah, how's that now? Maybe that's too big. So that is the question. So what you're given is a trial balance. So they have recorded all the transactions in the business over the last year, and they've extracted all the total balances into the trial balance. So that is what they have done, and these are the figures that they have arrived at. And even though in the exam the numbers will be different, the format will be exactly the same. So what we are looking at here is just an extract of all the balances on the accounts as of the 31st of December. And when we're preparing a P&L account, and this is what you need to get across. So what we are looking to establish is for the year that ended the 31st of December 2023, did the company make a profit or did they make a loss? That's what and the profit and loss that they made is for that period. That's all we're interested in. It's from the 1st of January 23 to the 31st of December 23. Did they make a profit or a loss in that period? So that's what we're trying to do. And while all these figures are extracted and the trial balance balances, that list of numbers as credit people tells us nothing at all about the performance of the business. And what we have to do then is to get these figures into the format that we have covered over and over again in the course. And by getting them into the correct format, now I will get an insight into what they sold, what they bought, what their gross profit is, what their expenses are, what their overall profit, and from a balance sheet, what they own and what they owe, that we know the financial position of the company. So really what we're doing is we're just taking these figures, we're putting them in the format. So the P&L account, it's called a trading profit and loss account, and trading is about buying and selling. And we do look at our sales, we look at our purchases, we look at our gross profits. So we're just listing those numbers down to make sense of it all. So that is that. So that's your P&L account, and that's easy enough. What we do is we have some notes to the accounts, and you will be getting notes in terms of deduction. So what they're saying is, yes, so that's all the accounts that they've extracted. Now they've got to the end of the year. They need to depreciate motor vehicles because they're in the books at the value at the 31st of December last year. We know they're worth less this year, so I'm going to have to adjust my motor vehicles that I have a correct figure in place for my motor vehicles at the end of the current year. Same for depreciation on fixtures and fittings. I have interest payable on a loan, so I haven't paid it yet. So because I haven't paid it, it's not in my accounts. I know I do have to pay it, and I know that it will come out of last year's figures, so I have to record it in last year's figures. The insurance policy, so what they did was they paid 8,000 quid for insurance on the 1st of July. So I know the 8,000 is spent. So I have a bill for 8,000. I have paid the 8,000. That is recorded. But because it's a 12-month policy that I bought on the 1st of July, what that means is that only half of that relates to the current year and half of it relates to the following year. So, I'm going to have to adjust my profit figure in the accounts to make sure that I have a true picture. And then the provisions for bad debts, because that's a movable thing as well. And again, back to reading the questions. So what are you required to prepare? Kathy, some background noise there. I don't know. I'll just hit mute. So the three things that you're asked to do is number one, a schedule of adjustments. Number two, a trading profit and loss account. And number three is the balance sheet. So in terms of this morning, I'll go through A and answer that one for you. And then Angelina's going to go through B and C with you. So hopefully you understand why we need to understand why we need to adjust the balances. So we're adjusting the balances to get a correct position. So the first thing is depreciation on motor vehicles. So probably the easiest way to do it is to just start with your cumulative depreciation on motor vehicles. Now, look, in terms of getting into debits, credits, and all that good stuff, I suppose if you're heading for distinction or whatever, well and good. So your cumulative depreciation on motor vehicles, the figure is there in your accounts. So plus that is your depreciation on motor vehicles. So depreciation currently is 26,100, right? Now you can either put in just an adjustment column here, in the middle. So I need to adjust that figure. So that's the depreciation for last year. What's the depreciation for this year? So it's telling me that the depreciation is 20% of cost. So there is the cost of my motor vehicles. So my depreciation is 20% of cost. So if I take my cost of my vehicles and multiply it by 0.2, which is 20%, now I know that I need to adjust my appreciation by 8,700. And so now my new depreciation figure is the 26,100 we had last year, the 8,700 that I need to depreciate for the current year. And that gives me, we call it an adjusted balance. So my adjusted balance is 34,800. So what I have to do is I have to record the depreciation, the 8,700, as an expense for the current year. So that's going to reduce my profit. And then in the balance sheet, I'm going to have to reduce the value of my fixed assets by 8,700 to take account of this year's depreciation. So that is that. Now, if you want to do debits and credits, by all means, do debits and credits. If you just want to put in a single adjusted figure, that is perfectly acceptable for the purpose of this.
And I think even in terms of time, Jack, as well, like just to kind of keep it simple for yourself. Also,
you're absolutely right, Angelia, because just in terms of you've only 40 minutes to do this. Now it is very doable in 40 minutes. So and we're going to do it today in a lot less than that. I'm just going to go through it step by step by step. All you have to do is extract the figures. So cumulative depreciation on office equipment. So again, where's my office equipment? There's my office equipment. Cumulative depreciation on, it's fixtures and fittings. Sorry, that's the same thing. Sorry, we'll just keep it consistent. Cumulative depreciation on fixtures and fittings. Sorry, and fittings. 26,100. My notes tell me depreciation on fixtures is 10% of cost. So how much do they cost me? They cost 132 multiplied by 0.1. So now I have to add 13,200 to my depreciation. So it was 26,400 last year. I have to add another 13,200 this year. So my cumulative depreciation on fixtures and fittings this year is 39,600, right? So the next thing then we have to look at is the loan interest paid. So let's have a look at that now. So we just go down through them one by one and see what effect is this going to have. So the interest payable on loan for last quarter, 5,270 to be accrued. Okay, so that's fair enough. So where's my loan interest paid? There's my loan interest paid there. So the figure is there in front of me. That's the loan interest I paid. How much has to be accrued? It's 5,270. That's grand. So now my loan interest is now that plus that. So that's how much I paid. I have another 5,270 that I know I'm going to have to pay. And so my adjusted balance now is 21,000. So that's 3 of the 4 adjustments taken care of. The insurance includes a policy costing 8 grand, which was paid on the 1st of July. So now we have insurance. So so my insurance is 8,000. Sorry, where's my insurance? Rent, rates and insurance. There it is there. So I know that includes 4,000 that relates to next year. So now I'm going to have to reduce the charge for this year, because 4,000 of the 8,000 relates to this year. So that's an expense for this year. And the other 4,000 relates to next year. So that becomes a prepayment, something I have paid this year that relates to next year. So that is my insurance. And then the then the last one then is the provision for bad debts. Now, again, watch the preposition here. So it could be the provision for bad debts is adjusted to 1.5% of debtors or adjusted by 10% or whatever. So just make sure you say, so the provision for bad debt is to be adjusted to 1.5% of debtors. So that's fine. So now look at our provisions. So there's my bad debt provisions. So what is it? Provisions for bad debts. There it is there. It's 5,500. I know I have to adjust it to 1.5% of debtors. So if I just take my debtors figure, which is there, and multiply that by what did I say? 1.5%, 0.015. So I have a provision in already of 5,500. I need to increase that to 7,127. So now the adjustment that I have to make is that minus that. So 167. I don't know how the penny came in, but sure, anyway, we'll look at that. Where are we? Format cells number. Okay. So they are so the five things that you have under the line, they are your 5 lines. So that's my depreciation. Just go down line by line, put in the figure from the trial balance, what we need to adjust it by, and it's important that you understand why you're adjusting it, and then what the adjusted balance is. And then when you move on to Angelina's section now, which is preparing the P&L account. So that's section A done. Now to prepare the P&L account, what you have to make sure is that you include these adjusted figures, not the figures that are in the P&L account. And all adjusted figures have to go in twice. They go into the P&L account and they go into the balance sheet. And if you can do that, then the whole thing should work and balance and everything else. So that is what, and also just to let you know as well, Angelina, you are going to send out the solutions, aren't you,
Yeah,
after today?
yeah. Everything that we've done today, yeah,
So, yeah.
sending out the solutions.
So what we'll do is we will focus on question 1 and 2 for you today to make sure you get over the line. We will send you out the solutions to all the questions, and then we give you the heads up as well. So I'm going to stop sharing now on the adjustments. Is everybody okay with those adjustments before I move on?
Yeah.
Because that can
Yeah.
be the tricky part. Yeah?
Yeah.
Okay, so that's grand. So just not to get yourself confused, and that's what it's all about. So just the instruments. Angelina, if you want to share your screen now and go through the preparation of the P&L and balance sheet.
Yeah, perfect. So you can all hear me clearly there, can you guys? Yeah.
Yeah, we can see that
Yeah,
there.
loud
Yeah.
and clear.
And is that clear? Yeah, the
Yeah.
screen. Perfect. So just a thing to note as well, to have your headings. So just that'll pick up a mark for you. So you have your Jack Jones Limited, and it's okay, Dec, if you call it either trading profit and loss or your income statement.
Absolutely, yeah.
There's no issue with that. So for the P&L account, what I find it, you'll always start with your sales. So I think a good point is as you're going through, it'd be no harm to tick off what you're including as you're going through, Dec.
Yeah.
Yeah. Just so that you know you're adding everything in, if that makes sense, so that you haven't missed anything. Okay, so for the trading profit and loss, the year ending 30th of December. So we'll start off with our sales figure. So that's 2375600. And then less your cost of sales. So your cost of sales is your opening stock, which is 158,305. Plus the purchase is 1651042. Less your closing stock, which is 150,500. That's your total cost of sales. subtract that, and that'll give you your gross profit. Okay, so that's the first part of the trading profit and loss.
And that's your first 10 marks to probably achieved at that stage.
Is that clear with everybody? Yeah.
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 Okay,
Yeah.
great. And then the next,
And as well, guys, if you want to do what Angelina did and type in the numbers, or if you want to, do plus and just pick the number out of the P&L. So the way I did the answer, beside the question, you can do that as well, or you can open a different tab as long as it's clear to us what you're doing when we come to correct it. So that is that. So you can either do a formula or the number. Yeah.
oh yeah, the
Okay.
formula was in the sheet already. And then simply less your operating costs. So you'll have your wages and salaries, which is 356,340. Your admin expenses, 78560. Your distribution and transport costs, which is 49,550. Your insurance, so that is, I don't have the adjustment there, but it's your
You get the
17,
adjusted figure,
17 and a half. Yeah.
17.5, yeah.
Yeah. Your depreciation charge for this period, so that's both on your motor vehicles, and your fixtures and fittings. So I would put the total in there for the two, so 21,900. Or you could put them in separately, Deck. Yeah,
Yeah, either way is fine.
whatever's
And,
clear.
and to be honest with you, I think probably for your benefit, it's easier to do it separately. The less calculations you do and the less you think, just write everything down. So yeah, but either is fine.
Okay. And then the increase in your bad debt provision, so that's your 1627.
Yeah.
So all of those total together will give you the 525,477. That's correct, is it?
Yeah.
Actually, the gross profit isn't correct there, is it? No. Should be
No, it isn't, because there should be less closing stock.
it should actually, sorry. Thank you,
Minus
Maria.
less. Yeah. Minus.
Mine too.
Well done.
Yeah.
Well done.
Yeah, perfect. There you go. I'm only human as well, going through things. So perfect. Okay, so we have our total of our operating costs, and then you'll have your net profit before interest and tax, which is, I had that in already. Actually, actually, sorry, that'll formulate that for you. Less your interest, which is 21,070. Sorry now. And that'll give you your net profit before tax, which is 170,206.
Yeah.
Is that okay?
So now you can see from the jumble of figures that was the P&L account, now it's starting to make sense to us. So we can see what they sold, we can see what they bought, we see what their expenses are, and we can see that this business made a profit of 170 grand. So all of a sudden we're happier now that we have a better figure. So brilliant. So, and again, that's part B of the question one done,
Yeah.
and you're up to heading for a pass mark even before you start your balance sheet.
And that's the same format all the time. So it's, you start with your sales, you'll have your gross profit into your operating costs, your total. So just, I know you could have maybe a little note in front of you, because you won't have time to be going through notes, deck, and all that type of thing. I
No,
know
you won't.
it's an open book. So
Yeah.
if you just say my P&L will always start with my sales, that'll give you a little bit of guidance. Is that okay?
Brilliant.
Perfect. Thank you.
Perfect. So then, yeah, we're on to the next part, which is the balance sheet or the statement of financial position. Again, just important to put in your title. So again, with the balance sheet, you'll always start with your fixed assets. So that would be obviously your buildings or your premises. So the total is 430,000. Then what were your motor vehicles at cost, which was 43,500, less your cumulative depreciation, which is the adjusted balance deck. Am I right? I'm writing that at 34,800.
Sorry, no, you've left me there. So buildings, cumulative depreciation. See, 34, 43. Yeah.
Okay. And that will give you the 34.8 less from the 43.5. 7. Okay. And then your fixtures and fittings is 132 less your 39.6. And that will give you 92,400. And then your total there is 531,100. Okay.
Yeah.
So that's the first part of the fixed
Okay.
assets.
So you just pick the numbers from the trial balance and then put in your adjusted figures, not the figures from the trial balance, put in the adjusted figures, and there you get the correct answer. And
Yeah.
guys, if you do put in the wrong number, then you'll be deducted a mark. So it's not the end of the world. It's not like if those your fixed asset figure doesn't agree, you get 0 marks. You will get marks for every number that you have in there that's correct. Okay, that's grand.
Perfect.
That's fine. And then the stock, just to clarify this as well. So you're doing your balance sheet as of the 31st of December. So your stock in your balance sheet is always your closing stock.
Yeah. Okay. That's the 150,500. Then you include your debtors, which is 468,007. Your bank, 7,852. And your prepayments, which is 4,000.
Your insurance
But
policy.
then that'll be your total figure there is your total current assets. Okay. Then current assets less your current liabilities. So again, you'll include your creditors.
Yeah.
There's no bank overdraft. So your mortgage for 1 year, you'll include that in the current liabilities. So that's 30,100. Your accruals, which is 5,270. And then you have your tax or your VAT payable, which is 84,075. So then your total current liabilities from your assets will give you your net current assets. Is that okay?
Yeah, or
Perfect.
that's also known as working capital.
Working cap, yeah.
Yeah.
Okay. And then finally, you're into treating the remainder of your long-term liability, which is your mortgage. So the remainder is 9 years. So that's 270,900. And then you will have I have my little note here, sorry guys. You'll be subtracting that from, sorry, now I'm actually getting a bit confused there.
No, you just add your fixed
Yeah,
assets, your
sorry.
net current assets, and subtract your long-term liabilities.
Subtract the
And that
long-term
tells you what the
liability.
business
Thanks.
is worth.
Yeah.
So it's 440,906. And then to double check if that's right, then put in your capital figure.
Which is 2,000.
It's 200, is it?
Oh, sorry, 2,000. Yeah.
Yeah.
It's 200. Thank you. Retained profits, 268,700. And then you have your net profit for this period, which is the 170,206. And then the total of those will be 440,906. So
Simple.
your net worth will balance, the two of them will balance there.
Yeah. And now you're done 50 marks. You've passed the exam already before you even go on to question 2. Now, just a few things for you. If those two balances don't balance, and I would nearly bet they won't. Is that okay? So just again, the words are don't panic. So if they don't balance, again, that's fine. If you have your format right, you are going to get most of the marks. So if you have all the things in the correct order, you have your sales, your cost of sales, your gross profit, your expenses, your net profit, and then in the balance sheet, you have your fixed assets, current liabilities, long-term liabilities, and financed by. That's a large part of the marks. If it doesn't balance, there's 3 or 4 things you can do. Number one is you just subtract one figure from the other. So subtract. So see, the net total assets is 449.06, and your net worth comes up with a different figure. Just subtract one from the other, and see what the difference is. And maybe look back over your P&L account to see, did you leave something out? Okay. So did you leave something out? So if your difference is 21,500, you go, oh, sure, or sorry, 49,550. The difference is, sure, look, I forgot to put in the distribution costs into the expenses, so that's why it's out. So if you just subtract the numbers, look for that number in your P&L account and see if you've left something out. If you can't find a number that matches that, then what I would do is, because I am fallible as well, what I would do is I would divide the difference. So say my difference is 264,000. And I'm going, how on earth am I out 264,000? By dividing it by 2, I get 132,000. And then I say, look, I subtracted my fixtures and fittings and I should have added them. So if you add something that you should have subtracted, you will find it if you divide the number by 2. So that is that. And if there is just a difference, say for example, the difference is 9,000 or 18,000 or 1,800 or 27,000 or something of that nature. If you ever see a difference that is divisible by 9, so I'm 18,000 out. How on earth am I 18,000 out? How you are 18,000 out is you put in 75,000 instead of 57,000. So if you transpose a number when you're typing it out, the difference will always be divided by 9. So any of you who can get figures jumbled up, if you put in a 50, and anytime you jumble a figure, so you put in a 42 instead of a 24, the difference is always divisible by 9. So if you see your difference is 27,000, you go, right, I must have put in, 63,000 instead of 36,000, and you go back and find your difference. Resist the temptation to keep looking. 40 minutes, set your alarm. If it balances, it balances. If it doesn't, it doesn't. Once your 40 minutes is up, move on. Okay? You can go back to it at a later stage. You've probably got most of the marks at this stage anyway. And look, I know the perfectionist in you wants to have everything balancing perfectly. It's not a prerequisite. It's not a requirement. And like, I know people who have gone through, accounting, qualified as accountants, and they didn't get balance sheets to balance, so it's not something to feel bad about. It's getting the stuff in the right order. If you have time, by all means do it. And there's a great sense of satisfaction when you get to the end of the P&L and it does balance. There's a cause for celebration. And if it doesn't, it's not the end of the world. Is that okay? So any questions for Angelina there before we move on to question 2?
Sorry, just the start where you had the adjusted balance done. Then at the start of the sheet there, we didn't have to do the debtors and creditors, was it?
Yeah. So if you look at the examples in the notes, we will. There's a debit and credit column.
Yeah,
Look,
You
as I
don't
said
have
to you,
to do that.
you're not
No.
accountant. You don't have to do that. You
No,
just have to
grand.
adjust the figures.
Yeah.
That's all. So, like, is this a debit or a credit or a no? Look, you're not accountants. So if you want to do it perfectly, by all means, and you're accomplished at this, by all means, do it. Just we want to see the adjustment and the fact that you know what the adjustment is and why the adjustment is done.
Perfect. No
Can
bother.
I
And then,
ask?
sorry.
Yeah.
Oh, go on. Sorry, you go ahead. No, sorry, don't want to disturb you. Go ahead.
No, sorry. Thank you. It's just will the sheet look like what you have there now? Will we lose anything if we have like the headings not included?
I know it's just for yourself for clarity, so like just keep it, yeah, just if you include the headings, because people do actually forget to put in the headings, actually.
Yeah,
I mean, if you're looking for top marks or whatever, great. But if not, no, that's fine. And as I said, you can call it P&L with the date, or just once we know that you're distinguishing between the two. Yeah.
that's
Is that
perfect.
all right?
Thank you.
Yeah, no
Cheers.
worries.
Okay, anything else, Priscilla, you were going to ask?
Yeah, could we have a copy of that sheet that you're working on there, so as we can cross-reference it with the video, just that you're going
Yeah.
to send us? Is that okay?
Yeah, that's no problem. Yeah.
Brilliant, thank you.
So if we put a template together, can we just work off that then on the day? Yeah.
Yeah.
Perfect. That's brilliant. If you guys actually, maybe that might be beneficial for you if you had a template. I think that would be okay. Yeah.
Yeah. Now, obviously, just to be aware that there might be different
Plus
words
and
in
minuses
the
and there.
real
Yeah.
P&L when you see it. It'll be 80% there. There may be other things in the real exam that didn't appear in the mock exam. And in fact,
Yeah,
sorry,
have something kind of-
I'm going to give it away, the fact that you're good enough, to turn up here today. There is one thing in the real exam that's not on the mock exam. And I'm going to tell you what it is. Is that okay? I can't be fairer than that. And the one thing that's in the trial balance in the real exam that you mightn't have seen before is the VAT control account. And just to get rid of all confusion there as well, that is money, VAT, that you owe. It's just a creditor. It's just money that you owe. It's not taxation. You see, because you guys think 4 steps ahead, and that's why you get into trouble and make this subject complicated. So if you see a figure for VAT, that is literally just the same as a creditor. It's just money that you owe. Is that okay? So stop getting into, oh, is this a tax and is this, blah, blah, blah. No, it's just money you owe. So everything else you will be familiar with, you will have seen before. Is that
Would you
okay?
treat it the same, Declan, as you would the tax payable?
No.
No?
No. The VAT payable is just a creditor. It's a current liability. It's money that you owe. Tax payable is, you see, you pay tax on your profits.
Oh,
So
yeah, of course.
that's
Yeah,
why it comes after the profit. So tax is not tax deductible.
yeah.
So you couldn't include
Shame.
it as an expense in the business, because otherwise then you'd have distorted figures.
Yeah.
So, oh yeah,
Right.
no, we do. Sorry, we have tax payable there. So yeah, so again, that's just a credit. So that's that. So that's the mock exam, which is fair enough. Okay, so if you're happy enough with that, then I will share my screen and we'll go on to question 2. And to me, question 2 is, again, this is Isabel's question. Why is that saying question 5? Yeah, I don't know. I sometimes get confused sometimes. Yeah, don't mind me. So this is question 2. And what you're given here in the P&L account is 3 years accounts for a company. Now, in the real exam, yeah, I'll give this away as well. In the real exam, it's going to look exactly the same in terms of that you have 3 years accounts that you're looking at. What you will be looking at, though, is 3 different companies. Okay, so what we've done is we've taken 3 different companies and we've extracted the P&L and balance sheets for all 3 of them. So the 3 companies are side by side, and again, you then are going to have to do the ratio analysis on them to say which is the best and which is the worst. Is that okay? And hopefully this is something that will stand to you in your future as well. So there's that. So there's your 3 set of accounts in tabular format, which is fine. And again, read the question. So 3 parts of the question, and you need to give 3 different answers to us for this. So A, you're required to calculate any 6 ratios of your choice for each of the 3 years. So this should include at least 1 ratio from each of the following: a profitability ratio, a liquidity ratio, and a management efficiency ratio. And just in case you think we're being mean to you, as part of the paper that we will give you, the last tab, and let me just make sure here. Yeah, it will be. The last tab is ratios. So we're actually going to give you the ratios. Okay, so in terms of looking up notes and whatever. So, and we're going to give you, what's that, 2, 4, 6, 8, 9 or 10 ratios. So all you have to do is pick 6 of them. Now, so in terms of your liquidity, either your quick ratio, your current ratio, or your quick ratio. In terms of profitability, gross profit markup or net profit percent. In terms of your efficiency, management efficiency, it's your debtors days, your stock days, or your debtor days, stock days, or creditors days. So that shows you how well the company has worked. So you just pick 6 of those. So I'd probably pick, profit percentage or whatever. Now, I have profit per employee. I don't think we tell you how many employees are in the company. Oh, we do. Yeah, so we'll tell you that so you can work out how productive those people are. So the formulas are there. That's what it's all about. So how do we calculate any 6 ratios of your choice for each of the 3 years? That's number 1. So that effectively is 6 ratios, 3 companies, it's 18 sums. Okay, so that's what you're required to do for part A. Part B, write a short comment on each of the 6 ratios, or alternatively write a comment on any combination of the ratios you've chosen. So in other words, what we want to see here, and it's a short comment, so we're looking at a sentence or maybe 2 sentences to say, this is good, this is bad, this is getting better, this is getting worse, this is the cause for alarm, or whatever the case may be. So just your comment is very important there to show that, number 1, that you can do the numbers, and number 2, more importantly, you can understand the numbers. So that is part B. And then part C, based on the ratios you have chosen, state whether you consider, now this is a single company, this company to be low, medium or high risk, and whether you would extend a credit line of 50,000. So again, if you answer yes, that may or may not be. So give us your reasons. So based on the ratio chosen, look, I am happy to give them 50 grand because ... So give us some intelligent rationale behind. And look, one person might say they would give 50 and some other person might say they won't give 50. And depending on their read of the situation and their understanding of the figures, there's no definitive right or wrong answer. So there's the figures and there is everything. So what we're going to do now is what I'm going to do is you only have to do 6. So what I'm going to do is I'm going to just pick 6. Let me see. So the 6 ratios I am going to pick for this is I'm going to pick, let me see here. So say net profit. Net profit percentage, I'm going to pick that one. I'm going to pick the current ratio. I'm going to pick the quick ratio. What else am I going to get? I'm going to take my debtor days. I'm going to take my stock days. And I'm going to, so what does it say? It says you're required to, any 6 ratios choice for each 2 years should include at least 1 ratio from each of the following. So that's 1 profitable one. I've done that. Current quick, that's 2 solvency ones, debtor days, stock days, and say creditor payment. So now you can pick any 6. That is that. And what we're looking at here is 2023, 2022, and 2021. So they're the 3 years that we're looking at. All right. So what is the net profit percent? Well, the net profit, and you have the formulas in front of you. So the net profit is your net profit divided by sales, right? And probably it's easier just to go, boom, it's your net profit. Now, I would take the net profit down here, divided by sales. Bump. So now, again, I would format this into maybe 2 places of decimal or whatever. So format your cells. Yeah, you can format them into percentages with 2 places of decimal. Okay, because you're asked to do that. So there we go. So our net profit percentage is our net profit divided by sales. Yeah. I show you a trick here just in case you want to know. If you want to do the other 2 years, all you have to do is copy that across if you've done that. So now I can see in 2023 it was 5.9, 2022 3.6, 2021 2.84. So I can see that this company's profit percentages are going up and up and up. So this is something that is good. So the next thing is the current ratio. And we go back to the formulas and we think, what is the current ratio? The current ratio is simply the current assets divided by the current liabilities. So plus my current assets divided by my current liabilities. Bang. So my current ratio, when you can either have it 1.51 or the current rate, its ratio is probably 1.51. Sorry. So you can do as 1 to 1.5 or whatever, or 151. So there you go. That's that. So again, the current ratio, that's for the 3 years. So that's it. The quick ratio, we know the quick ratio is the current ratio without stock. So plus my current assets, which is this figure here, minus my stock figure, which is that figure there. And I'm actually going to just put brackets around that now. So that is my current assets without stock divided by my current liabilities. So now again, 1.26 is my quick ratio there. And again, we can see a trend here straight away. So the first thing is just to work out the 16 sums, and this is probably the easiest way to do it. Right? My debtor days. So again, I have a formula for debtor days. So it's my debtors. Let me get this right. Yeah, well, let's go into the ratios. So it's my debtors divided by sales multiplied by 365, which is fine. So question 2. So my debtor days is my debtors, which is, where's my debtors? There's my debtors. Divided by my sales. And again, I'm going to do brackets here as well, just to make sure I get this right. Then divided by sales. Multiplied by 365. So again, sorry, no, I'm doing this wrong. I formatted this wrong, because these I have it down as percentages, but these are just numbers. Sorry, format cells. It's just a number with, say, 1 place of decimal. Okay, so now my debtor days 67.6 is my debtor days. So it's my debtors divided by my sales multiplied by 365. So we multiply by 100 to get it to percentage. We multiply it by 365. And again, if you have it in this format, you can either do the sums again, or because the columns are beside each other and these are too. I can do that. Stock is the same thing as well. So it's my stock. So again, look at the ratios again. My stock days is my closing stock divided by cost of sales. Now you might see some saying it's, stock divided by sales or purchases or whatever. As long as you tell us what you're doing, I'm fine. The formula we have given you is closing stock divided by cost of sales. So let's stick with that. So so my stock days is my stock divided by my cost of sales. Oh, sugar. Let's make it easy for myself. Why don't I? Yeah. Right. Boom. Okay. What am I going to do? Sorry. Because my cost of sales is, what is your cost of sales? Your cost of sales is your opening stock plus your purchases minus your closing stock. So that is your cost of sales. So yeah, that's right. Okay, so that's that. That's my cost of sales. So now my stock days is my stock divided by my cost of sales. So, oh no, I need to multiply that by 365. Sorry, it's days. I wonder what's going on here. Stock days multiplied by 365. So we've 19.5 stock days, and then we carry that across. And then my creditor payment period. What's my creditor payment period? It's my creditors divided by my purchases multiplied by 365. That's fine. So where's my creditors? There are my creditors divided by my purchases. There are my purchases. So I just do that, and then stick in my brackets. Where am I? There. Multiplied by 365. And look, I'm doing it in spreadsheet format. If you're not that familiar with spreadsheets and you first do it with a calculator, that's fine, and key in your number. Just if we can see a formula as to how you did it, it just we can see if you got it right. So part A of that question, in terms of calculate 6 ratios of your choice for the 3 companies, that's all that we want, is that little table there. Yeah. And I say, if you want to do it on a calculator, if you want to do it the way I did it with a spreadsheet, if you want to have pen and ink and write them down and type them in later, that's totally a matter for yourselves. So part A I have done. So we're going to calculate 6 ratios choice for the 3 years. There's 1 ratio, and so I've done that. Number 2, write a short comment on each of the 6 ratios. So again, and you could do it here. So comment and just make this a bit bigger. And again, look, I'm not going to give you scripts, but what we want you to do is look at the trends. So as we can see here, the net profit is going up year on year from 3% to 3.5% to nearly 6%. So the net profit is increasing, and that's a very healthy sign for business, that they're more profitable year on year on year. So just say that is the profitable. We love seeing profits going up. The current ratio is getting better. So maybe rather than show that as percentages, maybe I should show that as just a number as well. Number, decimal place is 1. Okay. Yeah, that probably makes more sense as well. So my current ratio has gone from 1.2 to 1.3 to 1.5. So the bigger the current ratio, the better the solvency, the better their ability to pay their bills. That is fantastic. Their quick ratio means that they're able to clear their current liabilities without stock, and the fact that it's over 1 means that they are solvent in that regard as well. So if that was 0.7, you might think, look, these guys could have solvency problems or whatever the case may be. Their debtors, like these are model students here, because the debtor days are fallen from 74 to 71 to 67. So they seem to be getting their debtors under control as well, and it's going in the right direction every year. Creditor payments. Now, I know I disagree with accountants here. Accountants will say the higher the creditor days, the better it is. I say the lower, because we're credit people and we like people who pay their bills. So the fact that their creditor payments are coming down means they're paying their suppliers quicker. I like them. That is good. And in terms of stocks, yeah, we can see a stock trend as well. So they've 19 and a half days stock, and that's down from 25. So each year their stocks are getting tighter, they're managing it better. And that's that. Now, I could have looked at my sales figures or sales growth, or there's loads of different things we could do. But just in terms of that question, do the 18 sums and then just write a comment, which is a line or two, that says this is good, this is bad, this is mixed, this is, like if my current ratio was 0.6, that would be alarm bells. They've only half the money they need to pay their current liabilities, and this could show a sign of insolvency down the line. Yeah. So is that, and then the final thing, based on the ratios you've chosen, whether you consider them high, medium, or low risk. So that's what it's asking you there. So again, we've given you lots of different ways of calculating a credit line, and one of the things that's here as well, which is your working worth as well, just in terms of establishing, whether we can give them credit or not. So again, whatever method you are comfortable with, in terms of, because the current ratio is good and getting better, I would put them into a low risk category, because they can clear their debts without looking at their stock. Then I am happy enough with that. So in terms of working worth, I would probably say, well, look, my working capital is 227. My total assets are 497. And if I can put brackets around that, and just divide that by 2. So I have a working worth of 361,000 when I work that out. And remember, we said we could give them up to 30% for low risk customers. So based on the working worth and 30%, that gives you 108,000. Would I give them 50 all day long? Absolutely, no question about it. So in terms of how you calculate, your line of credit or whatever, or you give it, so they're solvent, they're profitable, they're long lasting. They, are these good for 50 grand? Yeah. And look, you're looking at last year's accounts. You don't know what's happened in the meantime, but the best estimate that you can make is, yes, these are good for the money. Yeah. And that's all that's required for question 2. So it's 16 sums or 18 sums. You can either do it on a calculator or in the spreadsheet, and then, but sense check it when you do it. Like, if you have a current ratio of 32.7, you've done something stupid, So just be aware of that. So, and again, that's 50 marks out of 140. So if you can get the P&L account and these ratio questions done, that is the lion's share of the marks that you need without knowing anything else. So just take your time, do the sums. Personally, I prefer to see formulas than numbers, because if you give the formula, I can say, look, they forgot to carry the one, or if I see where you got your answer, I can see, does this person have a clue or not? And if it's a genuine mistake, we might give you half marks for it. If it's just a number, it's either right or wrong. So that is question 1 and 2. And
Can I ask a question on that, Declan?
yes,
Sorry.
please. Yeah.
So for the net profit percentage, if we chose the other net profit before interest instead of the
Fine.
or tax, like, would we lose marks?
No.
Okay.
No. Because what matters here is consistency, where we're seeing the trend. So as long as you pick the same number every time, then the trend will emerge. So it won't make any difference at all. And there can be 3 or 4 different, if this was a real set of accounts, they would have taxation under that as well. So your retained earnings could be considerably less. So as long as you pick the same number and work with it, then you will see the trend, and that's really what we're looking at here.
Okay.
Yeah, thanks, Emer.
Can I ask, were the solutions sent out to this assignment 2 and the short test 4? I'm just wondering, did I just miss them, or have they not been sent out yet?
Yeah, no, I sent them to you, Emer.
Okay.
Yeah, well, maybe
Okay.
resend
Do you
them.
have-
Yeah.
Do you have a personal email? Do you want to drop me? Do you use your
I
work?
used my personal email, but
Oh yeah, perfect.
thanks.
Yeah, well, if you can resend just in case, because communications is great. So just maybe resend them today, because it's good to have feedback and know what you're doing and how you're
Yeah,
doing.
I'd appreciate that. Thanks.
Yeah.
Actually, do you
So
guys want me to
resend.
send you the solutions for everything then?
Yes, please.
That'd be
Please,
great.
thank you.
Everything, all the tests, assignments. Yeah. Okay, perfect.
Yeah, just resend them in
Just
case you've
have you have
lost
it
them
in one
anyway.
email. Yeah, no problem.
You have the solutions there, and I have the solutions. So even though, look, in the time allotted, and we said we'd focus on question 1 and 2 because they're where the big games are, I also have I have the solutions here, and I will get them over to you, so you can look at the other questions, the smaller questions, and the solutions will be there as well. Is that okay? So that's that. Just to let you know as well, question 8 is always going to be a multiple choice question. It's the trick. I would run a mile from it, to be honest with you. It is tricky. It is not easy. Now I have given you a clue though, and the clue is that there's no negative marking. Is the penny starting to drop?
And so it's 4 to 1.
Stick
take a
something
stab.
down. You might
Take a
get
stab at it.
you might get a mark. I shouldn't tell you that, but I will. So remember, we said you can do an extra question
Yeah.
if you're down to your last 5 minutes.
Close your eyes.
Close your eyes and pick the.
Pick a mix. Pick a mix.
And it just might be, and it just might be the one. I think of all the questions, it's the trickiest one. Look, if you're really want to challenge yourself, by all means do it. And as I said, if you want to have a stab at it, we won't know. So and if that's your third question, it might just pick up half a dozen marks that might make all the difference in the end, or it might even get you from a pass to a pass to a merit. Right. Okay. So that is that. Last thing. So you have the answers and all that. Go away. What I want to do is, so you have to do question 1 and question 2, and then you have to do 2 of 6. Okay, so we're going to give you 6 questions, and you only have to answer 2 of them. All right, now I've already told you question 8 is going to be a multiple choice question, and do what you will at that. Have you got your notepads ready? Question 3 is about cash flow statements. This is on the real paper. There will be a question on cash flow, because as credit controllers, that is that. All right. Question 4 is going to be on FIFO and LIFO, which is your stock, which if you get it, it's probably the easiest question in the world. But anyway, if you don't, ignore it. And you don't have to do all, you only have to do 2 of the 6 questions. So if you decide, life is too short for LIFO and FIFO, I'm not going to do this, then you don't have to do it. All right. Question 5 is going to be on bad debt provisions. So again, your aging and your percentages based on, so you'd be asked to calculate a bad debt provision based on the aging of a debtors and, work out on that as well. There is going to be a question on a scoring model. Do you remember the 0, 1, 2, where you have your numbers and you pick which is best and which is worst? Was there a, yeah, there was a question. Yeah, I'm still sharing. Yeah, here's question 7 in the mock paper. So the question 7 in the mock paper. So it's giving you the information and you do your 1, 2, 3s. Yeah. So you 0 for the worst, 1 for the middle, and 2 for the best or the worst. And so it will be very similar to question 7 on the mock paper, on the real paper. So again, if you understand, and all you have to do is, where 0 is the best, 1 is the middle, and 2 is the worst, and knowing that the highest number of what we want is good, the highest number of what we don't want is bad. So the highest number for current ratios is good, the highest number in debtor days is bad. So if it's something we want or something we don't want. So just to give you pointers there. So it's a simple scoring model. Put in your 1, 2, 3, total it up, and tell me what the score is for the company. And question 6, and I don't know if we had it here. Yeah, question 6 is the same as question 6 on the mock paper. Yeah, this is the mock paper. These the Z score things. So where, and we give you the Z scores as well, where you just score it in terms of 1, 2, 3 based on their profit and their average and current and all that kind of good stuff. Can be a bit messy. You've only 20 minutes. I don't know if I'd have a go with it, but again, if you're comfortable with it, that will be a question or not. So you know the areas to focus on. If I were you, I would pick the 2 that you like best and focus on them, and then have a third one as a backup just in case there's a stinker of a question that you don't understand. So hopefully 7 minutes beyond the time that we allotted, I hope you feel more relaxed that you will be able to do this. That the P&L account, I can do that. The percentages, I can do that. The commentary, I can do that. And I can have a stab at, a cash flow, a bad debt provision, or a Z score, or whatever the case may be. And if all else fails, sure, I'll have a go at the MCQs. And, you only need 28 out of 70 to get through the exam. You can do this, and you will do it. And the fact that you're here, and as long as you listen to us on time management, if you spend the 2 hours trying to balance the balance sheet, you will be in trouble. If you do the trading loss as best you can, move on, do as many percentages as you can, and then move on to the next, I guarantee you will be fine. And this knowledge will stand to you for the rest of your career. It might be a pain in the neck now. In 5 years' time, somebody is going to drop a set of accounts on your desk and say, are they good for 50 grand? And you're going to go, I know this, And, even in your ongoing career, while yes, we might rely on, information providers and credit scores from one of the agencies or whatever, that's working to their algorithms. Your business is different. So anyway, so that is that. I've stopped sharing. We get that to you. I will stop recording now as well. So I'll just do that.